Good morning, everyone. You are watching a live daily market outlook for Monday, 25th of June 2012, prepared by Windsor Brokers. At the beginning of a new week, the negative sentiment continues to drive most of the instruments against US dollar lower, as a slight lower opening seen on euro and sterling, and rather quiet overnight session now are again accelerating losses, with euro losing its significant support at 125.00. Also sterling attempting towards last week's low at 155.55, with the gold and the crude oil being quite steady at the last Friday, and recovering some of the losses are again moving towards the downside. At least this morning's price action shows that a negative sentiment will be again the main driver of the instruments. The top, the winner of the week was the US dollar, that again gained a lot as number one now safe haven instrument, as uncertainty about global economic situation and further weakening seen keeps the investors moving their positions mainly into US dollar. All eyes are now turned towards the Eurozone summit, with the European leaders expected to discuss more specific steps towards cross-border banking union, closer fiscal integration, and the possibility of debt redempting fund at the summit that will be in a couple of days, of June 28th and 29th. According to some documents already passed to the media and prepared for the meeting, officials familiar with the document drawn up over the past month, and which is still being revised ahead of the summit, said it sets out in detail the four pillars required for a strong economic and monetary union, which leaders believe is necessary to secure the currency project's future, as well as progress towards the banking union. The paper discusses the need for a more integrated budget policy, steps required for a deeper economic integration, and how to retain democratic legitimacy in countries give up some sovereignty. The document has been drafted by top Eurozone officials such as Jose Manuel Barroso, the Mario Draghi, the European Central Bank chief, and Jean-Claude Juncker, the head of Eurogroup countries using the single currency. European leaders have already said that the first area they need to work on is banking integration, as they try to break the link between bad banks and indebted governments, with the worsening situation in Spain an immediate concern. EU officials believe that could be achieved in a year, although Berlin wants to see much more progress towards fiscal integration first, something that would require much longer time due to the need to change the European Union treaty in order to achieve this target. As said, the main focus this week is in the Eurozone summit, and this will keep it also focused in our coming sessions. Just briefly to say that today's calendar has basically only one important release. It's a new home sales from US due at 1400 GMT. Pardon, the forecast for today is 347,000 units, slightly above the previous month release, and 343,000 units. As said, the euro continues its weakness from the last week and breaks below some important levels at the beginning of the European session. So we're going to start with euro. As we can see, brief gap lower opening was seen at the beginning of the week, with the break below the Friday's low at 125.18, also marking a 50% retracement of the up move from 122.87 to 127.45, the peak of 18th of June 2012, keeping the focus firmly at the downside. This morning's acceleration at the beginning of European session has so far seen a brief break below 125.00 handle as round figure support, and sees potential of further extension lower as studies on the 1 and 4 hour charts are well in the negative territory, and the loss of initial bullish momentum in the recent rally, as well as a break below 50% retracement, now sees potential for test of next Fibonacci support at 61.8% at 124.62, and more significant 124.40 higher platform lows of 8 and the 12th of June 2012. Basically, we need to see break below this level. These are now seen as our immediate downside targets, and the break below these levels is to confirm the top at 127.45, double top basically, and the open way for reversal towards 122.87, recent low posted on 1st of June, as the pair's recovery attempt of 122.87 has so far stalled at 127.45, with the also negative fundamentals pushing the euro's price significantly lower and threatening the end of the current recovery attempt. As said, break below 124.40, 124.00 is required to confirm, and signal return towards 122.87, and possible further extension lower as a part of the long-term descent of a single currency from 149.38 1st of May 2011 peak, with the 121.50 seen as the next significant target ahead of a very significant psychological level at 120 level. On the upside, the previous lows at 120, previous supports at 125, 125.18 now acting as initial resistances, while only break above last Friday's peak at 125.82 was also 55, descending 55 days exponential moving average, and 126.00 as round figure resistance will provide a temporary relief. Basically, we need to see the close today above 126.00 in order to ease the current bear pressure, which seems to be quite unlikely according to the current situation in the markets and the negative sentiment that continues to drive a single currency lower. Sterling also remains under pressure, as this morning's action is now testing the previous week's low and last Friday's low at 155.55, with the brief break lower seen to 155.51 since so far, looking for further extension of the down move, short-term down move from 157.76 20th of June high, as break below 38.2% retracement, and strong static support at 156.00, and now threatens further extension lower. Ideally, what we mentioned in our few previous sessions, ideally was expected to see the reversal somewhere above 156.00 in order to resume the short-term up move from 152.67 low of 1st of June. However, now the situation is worsening again as the pair breaks below last week's low that sees immediate threat towards 155.21, 50% retracement of the entire rally, and the more significant and strong support at 154.60, 154 zone, 154.60 mark, 61.8% retracement. Also, it's the consolidation range floor of the past 2 weeks, and 2 weeks ago, and the break here and the 154.00 is expected to turn focus completely down and open 153.20, 153, and finally 152.67. I have a yearly low at 152.33 posted on 13th of January 2012. As shown on the daily chart, the short-term recovery attempt of 152.67 was capped by 200 days moving average at 157.50 zone, and just ahead of 157.80, 50% retracement of the down move from 163 to 152.67, with the current reversal further weakening the tone as the daily studies are again losing momentum, and most of indicators are pointing lower. That seems that looks like a serious threat of further extension lower, as the 55 days moving average is attempting now to break below the 90 days one at 158.40 zone. That will put additional pressure on the pair. Immediate support 155.37 is the descending 20 days moving average on the daily chart, break of which, and the levels previously mentioned at 155.20 and 155.00 to open the next very significant supports, 154.60 and 154.00. And the dollar yen is at the beginning of the week in the corrective action after a strong rally of 78.80 zones started last week on 20th of June, cleared some very significant barriers at 79.80 and 80.00, also 80.13, and touching our next upside target at 80.60 zone. So far this was seen, 80.61 was touched during the overnight session, and currently the pair is in defensive mode, reversing towards 80.00. That might be seen as a threat of further weakness, as studies are turning negative and losing the initial bullish momentum. Also, price action broke below the recent move below the 55 days moving average at 80.12. Immediate threat is seen on break below 80.00 and the 79.91, which marks 38.2% retracement, and the previous range top at 79.80. That will further weaken the near-term structure and put the near-term bulls aside for now. On the upside, break above 80.60 to open 81.00. Dollar Swiss again entering its third leg of recovery of the recent base at 94.20 zone, as the rally seen this morning breaks above last Friday's peak at 95.90. That marks also the brief consolidation range top, and break above 96.00 now looks for a further extension higher towards Fibonacci 61.8% at 96.36, and other static barriers 96.50 zone, peaks of 8 and 12th of June, ahead of another one at 96.75, 5th of June high, a break of which is required to turn the focus completely higher and look for test of levels above 97.00, as the recent break above 95.60 that also marks 38.2%, and the previous peak of 18th of June confirms the double bottom pattern on the 4-hour chart. Further extension higher is seen likely at this point, as short-term studies are positive and supportive for further extension, as 20 days exponential moving average currently at 95.38 breaks above 55 days one and underpins the current action. Basically only break below these levels, which marks also last Friday's low, would delay immediate bulls in favor of deeper corrective action. The crude oil ticked higher during last Friday's price action, as storm in the U.S. push that threatens the slowdown in the refinery production, push the prices higher. So far we have seen 80.65 on the August contract. This was the high of Asian session, with immediate reversal below 80.00 seen at the beginning of European session. A slightly positive tone still persists on the hourly charts, but studies started to point lower. We don't expect much to be seen, as the current action was limited by descending 20 days exponential moving average, with further move below 80.800 barrier, looking for a further weakness, as the oil remains in the strong downtrend of its yearly peak at 110.53 and the lower top at 106.41 posted on 1st of May, with the 77.54 seen so far. Significant was last week's break below the strong support, where there was an attempt of building base at 81.10. That was the gains were limited at 87.00, with the further weakness now threatening a retest of longer-term supports at longer-term targets at 75.70 and the 75.00 zone, as also indicative was attempt through the long-term ascending bull trend line drawn of 67.15 at 2010 peak through 74.94, pardon, 2010 low through 74.94 2011 low, with the firm break here to turn the focus completely towards levels at 75.70 and 74.94. Immediate resistance on the near term stands at 80.65, overnight's high, along with the 81.00, while only break above firm break above 81.10, previous strong support now reverted to resistance, would I would say pause the current negative action and allow for some stronger recovery. Only break above 87 levels, peak of 7th of June 2012 would provide a temporary relief and open way for a stronger corrective action of the strong medium-term descent from 1st of May 2012 peak at 106.41 that so far dipped to 77.54. And finally, brief look at yellow metal, as the immediate threat remains for a test of critical support zone at 15.20.30 zone. Some recovery was seen of last Friday's low at 15.58, where the strong descent found temporary support, with a brief bounce higher to 15.76 seen so far, as the studies remain firmly in the negative territory. Some recovery was seen in the hourly chart and the regain of momentum, but so far 55 days exponential moving average descending at 15.78 currently is so far limiting the upside, and basically we need to see the break here and the 1600 as our next key barrier in order to provide near-term relief and prevent the gold price from further sliding. Otherwise, the likely scenario would be further easing through 15.58 and 15.55 recent lows for possible retest of 15.32 and 15.26, very strong support zone that kept the downside protected from September 2011, and this is basically seen as a break point for the gold's medium, longer term, I would say, reversal of 1920, the peak historical high of yellow metal posted on September 2011, with break below 15.20.30 and 15.00 to trigger the stronger, the further reversal and further correction of the long-term ascent that goes from past over 10 years from the levels close to $250, $300 that peaked at close to $2,000 per ounce. That was all for today. I would like to thank you all for being with us and attending our live webinars. We're back tomorrow morning at the same time at 7:00 GMT. Until then, I wish you a nice day and very profitable trading. Good luck.